All right, here's step 2 in how you can pre-qualify for a mortgage on your own, and that's to get your credit report. You want to get your x-rays. You want to know how you look on paper, so to speak. Now, I recommend not using an app like Credit Karma. Nothing against Credit Karma. I love them. I use it personally, but to get it directly from all 3 credit bureaus. If you're finding this on YouTube, in the description link, you're going to see information on how you can go to annualcreditreport.com, as well as the phone number, or if you still like using snail mail, a way that you can mail to get a copy of all 3 of your credit reports, because as a consumer, that's your right as a consumer to get all 3 of your credit reports annually for free. And you want to see, like, this is where you're doing the x-rays and you're playing the doctor. How do I look on paper? So credit consists of primarily 2 key things: how you pay things and what you owe in relation to your bills. A big part of your credit score is how you pay things. If you don't pay things on time, you're not going to score as well as somebody that pays their bills on time. That's just the reality. And I've been there. If you've been following my YouTube for a while, check out my video that talks about my struggles when I was in my early 20s. So no judgment here, but got to be direct. How you pay things is your credit. If you've taken a bill out for someone and they screwed you, sorry, it's on your credit. You put your credit at stake. It's your personal responsibility to pay that bill. And I'm so sorry to tell you that you're responsible for it. So if you have collection accounts and you have accounts that you haven't paid, most creditors will settle for anywhere between 10 to 50 cents on the dollar. Now, what does that mean? That means if you owe 100, you might get them to take 10 bucks or 50 bucks. If you don't have all that money in full, come up with a payment plan, get it in writing that you can commit to, that you can consistently pay. And some of those bills, it may kill you to pay those, especially if you co-signed on a friend's auto loan and the auto loan got repossessed. I am so sorry to tell you, if your friend's burning you, you put your credit on the line for that. The other big piece is what you owe in relation to what your limits are. So I'll see people make this mistake all the time. They go and open a ton of credit cards and max all of them out because they think they have to have a lot of credit cards. You really only need about 1 or 2. If your limit's 1,000, don't charge any more than 300 bucks. Now, if you're in a situation where your credit cards are maxed out, then what you want to do is spread them out. Spread out the balances so that you can get below that 30% threshold on your limit. Or if you have good credit and you're a good payer, reach out to the creditor and ask for a credit increase. So this way, if your limit is 1,000 and you owe 1,000, ask them to increase your limit to $5,000 or $6,000. The other pieces of credit, inquiries. It's a very small impact on your credit score what inquiries will do. And if you've seen some of my other videos, a lot of times I think lenders will tell people don't have your credit run because they have fear. They have fear that, I don't know, maybe they're not the best lender, or maybe you're going to go with somebody else. So in the situation of credit inquiries, don't stress if you see credit inquiries. The other thing is the mixture of your credit. This is a small piece of credit, but the mixture of your credit. Do you have student loans? Do you have credit cards? Do you have a personal loan? Do you have an auto loan? Now, if you're the type of person that pays cash for things, great. But if you have what's known as a thin credit file, or maybe when you get your credit report, you have no credit score, if you have the ability to pay cash for a car, go get a car loan, put half down, and be aggressive with paying extra every single month. So you won't pay that much interest, but you'll be able to build a credit history that way. Another way is signing on as an authorized user on one of your parents, family members, or friends' credit card. Do that only with somebody who has good credit and doesn't have the account maxed out. So that's how you can see the guts of your credit. Now, if you watch the earlier video, step 1, and you want to figure out the debt ratio that lenders look at, let's say, for instance, you're going to college and you're in grad school and you're going to have your loans deferred for the next 12 to 24 months. depending on the loan program, we're either going to take a 0.5% of that balance and use that as an estimated payment, or 1% of the balance. Or if you're a veteran, we're going to take the balance times 5% divided by 12 and use that as the minimum monthly payment. So even though you may have loans that are deferred, there still needs to be a monthly obligation on those payments. So this is step 2. If this is a video that you like and getting pre-qualified, give me a thumbs up. If you don't like it, I won't be sad. Leave me a thumbs down. And if you think that this is something that can benefit a friend or a family member, please share and please subscribe and keep your notifications on for future videos. See you tomorrow.